Hey, today's Friday, April 9th, but I'm going to be talking about the one trade I took, which was on April 7th, and that was on Facebook. I'm also going to be quickly going over my thoughts about the market on April 8th. I didn't trade yesterday, which was a Thursday, but just some potential setups which I potentially could have traded, even though the market yesterday was not ideal conditions to trade in. So let's start off with Facebook. Let me go to a daily. Let me see if I'm recording. Okay. So let me start off with the daily time frame. So keep in mind that I only had data up to here. So from this perspective, we broke all-time highs. We're holding all-time highs. We're forming a rally base and a potential rally on a daily time frame. We have no supply zones, no areas of resistance, so there's absolutely no reason to go short on an equity like Facebook right now until we see some sort of downside pressure form. But for the time being, I definitely have a bullish bias on Facebook. And so let's head down to an intraday time frame. Okay, so okay. So this was Wednesday's action, and I'm going to be going to Wednesday's action on ES and Wednesday's action on NQ. Okay, so Facebook follows both ES and NQ, but as we all know, Facebook is a tech equity, so I give NQ more importance when trading Facebook. Right off of the bat, you can see that Facebook's first 5 minute candle is a nice explosive move. It moved from a low of 305.5 to a high of around 308.8. So over a $3.50 move in a 5 minute period with a nice lower wick uh, is definitely a bullish move on Facebook. But look what happened to NQ. NQ's first 5 minute move was down. It was a 40-50 point move to the downside in a 5 minute period. So pretty aggressive, but you can see that Facebook, on the other hand, was completely opposite. Yes, ES rallied, but ES's first 5 minute candle had this nice upper wick, while Facebook had an upper wick, but it wasn't super significant. So I can automatically tell right off of the bat that Facebook has signs of relative strength. So after determining that Facebook has relative strength, I'm looking for some sort of setup to trade. The first thing I see is we have 4 hour supply, and just in this market, I've been noticing that supply zones aren't actually areas where we reject and head lower. They're pullback areas for us to accumulate more orders to the long side and move up. I always talk about impulse consolidation and impulse, and especially in this market, what I've been seeing is a nice impulse of $3 to $5 move in a short period of time on good volume. Notice that this is very, very good volume. Uh, Immediately after that, we pull back, but we don't sell off heavy. We just pull back on lower volume, and then eventually we have a nice move up on increasing slash consistent volume. So that's just impulse consolidation. Impulse, it's what I've noticed in this market. And impulse consolidation, impulse works in every single market, but this idea of us just barely pulling back from supply and moving up is a very common factor in this market. So let me talk about my entry real quick. The confirmations I had were a break of this 310 mini key level. And the reason I say mini key level is because we're at all-time highs right now, so we don't have any significant key levels to trade around. But I did notice that this 310 level, it's a rounded whole number, which is a psychological number as well. We came up, we rejected once. We tried holding value, we couldn't. We came down, we rejected twice. Again, we chopped around in this area. We made a new all-time high here on Tuesday, but we immediately failed. Came back up, tested 310, failed. So 310 is an area of resistance which buyers are having a hard time getting through. So I know that if we can get through 310, there will most likely be a squeeze up. Besides this break of 310 mini key level, us basing in supply, nice volatility from ES and NQ to the upside, relative strength on Facebook. Facebook also had very nice volume. You can see on this 1010 candle, we had the highest volume of the day, and we closed with barely any upper wick, a very thick bodied green candle, and usually the 930 candle is supposed to have, or is not supposed to, but tends to have the highest volume of the day. But you can notice that this 1010 candle actually had the highest volume of the day and didn't really close with an upper wick. So this is letting me know that the sell imbalances placed in supply are completely gone. We're primed for more upside on Facebook. And the reason I didn't play this 10-15 candle, and I know a lot of people and myself in the past would have played, is because I always talk about impulse consolidation and impulse. When playing breakouts above key levels, you're expecting moves like this green candle. But if we already had a move like this green candle, what are the odds that we're gonna have another major move like this green candle without showing some periods of consolidation? Yes, Facebook could have replicated this green candle on this 10-15 candle, and I probably wouldn't have played it. I would have looked for a different setup on Facebook. And for those who would have played it, congrats, it would have been a nice winner. But I always stress how we had a nice impulse move, a period of consolidation. My entry on this 5 minute RBNR. As soon as I entered, we had a nice move up and we failed, but at this point NQ was basing in supply. It wasn't rejecting at all. So this 3 hour supply on NQ didn't worry me. So I held through this period of consolidation. This 10-25 candle retested this 310 mini key level. Uh, it acted as support now. As I talked about, we had trouble at 310 because it was acting as a level of resistance in the past couple of days. But now you can see that 310 is clearly acting as a level of support. And you can see that here as well. We have this nice move up. We come down, retest this 310 key level, and move higher. So that's support and resistance 101. I took my first contract off at 10:35 because I saw this decent sized red candle in ES, and that scared me. And it's not a bad idea scaling on the way up. It's always good to protect yourself when you're in profits. So that's why, because of this red candle in ES, I scaled this contract out. But I continued to hold through this consolidation phase, and that's because my final target was previous all-time highs. And since I was playing two contracts, I took off my second contract here at 1040. It was actually, yeah, at 1040 when when I was happy with my profits and my final target was hit. So my aim was to make $1.50, and if my entry was a little bit below 310 and I was risking a little bit above 309.56, then my risk to reward is 3 to 1, and therefore a good trade. So yeah, there's a lot of things going on for Facebook, and that's why I took this trade. It was my only trade for Wednesday, April 7th, just because this was the only high probability trade I found. And sometimes one good trade is all you need. I locked in over 15 to 20% on the option contract, so a little over $100 for my account size, which is it's pretty good because eventually though those winners, decent sized winners, will just continue to add up. So that was my trade recap on Wednesday, and I just want to quickly go over Thursday's action. So this is ES on Thursday, April 8th, and you can clearly see that. Look at NQ on Wednesday, right? We had a nice rally to the upside from a low of 13,510 all the way up to 13,630. So over 100 point move. Um, Obviously you can't compare points in NQ to ES, but I mean, from market open to around 11:30, ES hadn't moved a single point. There's no volatility. This is chop. We have a lot of wicks. The candles are very small. They're not thick body candles like these on NQ. No volatility, so there are going to be less setups in a market like this when there's no direction. There's just chop. Eventually, we did rally a little bit to the upside. I don't have zones charted out for Thursday, so I don't really know where demand and supply is. But we had an end of day rally. This is the type of volatility you want to be a part of, right? You don't want to be stuck in action like this. So that's just market conditions and when to trade and when not to. But I think there was one not super high probability setup, but a decent sized probability setup, which I may potentially have taken. So let me go to NQ on Thursday as well. Again, same thing on ES and NQ. NQ is actually worse. I mean, how the hell are you supposed to trade action like this when it's up, down, up, down, up, down, decreasing volume? We haven't moved a single point in the first 2.5 hours. No volatility. All I see in this are wicks, lower wicks, upper wicks. The candle sizes are very small. It's just super hard action to trade, and you don't really want to be a part of this unless you see a super high probability setup. But anyways, I just want to talk about a potential trade on Thursday, April 7th, on Tesla. So I was scanning through all of the equities yesterday, and Tesla at 10 was the only equity which broke high a day. You can clearly see um, a stock like or a future like ES is actually making lower highs, which is a bearish sign. But something to keep in mind is that 678 on Tesla is a significant key level. Let me just mark that right. Key level. And I don't want to take the break at 9:55 just because ES and NQ aren't doing anything. I don't have enough data to determine if Tesla has relative strength. But once we broke high a day and we held this 678 key level, as I said before, we acted as resistance here. We break it and then we act it, and then it acts as support once right here and then twice right there. So on top of this break of a 678 key level and the fact that we had relative strength, look at this volume. Nice significant volume, nice consistent volume. Usually what happens is, as I said, when the market opens up, we usually tend to decrease in volume just like that. But in this case, we had nice and consistent volume. Obviously, I don't want to take long setups if the market is making lower highs. But I have a friend who pointed out that ES hit 45-minute demand perfectly at 10:10. And look at what Tesla was doing at 10:10. Tesla was retesting the 678 key level and getting ready to move higher. So let me just actually add drawing. So right here, ES hit demand perfectly while Tesla retested the 678 key level. And on top of all of that, Tesla actually formed a 15-minute RB&R. It wasn't the cleanest RBNR. We had this nice 15-minute rally candle with a nice lower wick. Uh, technically you want to see basic candles close as red, but this was so small, and this kind of close as a doji candle. So technically I would still count this as a basing candle, and then again a nice rally to the upside. So yeah, it wasn't the highest probability trade. This wasn't the best rally candle. This technically didn't close green, but we did have relative strength. We did break and retest the key level. We did have nice and consistent volume. ES hit demand perfectly and started moving higher. I'm assuming NQ probably hit demand or close to demand as well, and that's why Tesla could have been a decent setup yesterday. But besides Tesla, I literally did not find a single setup to trade. So if I miss Tesla, that's completely fine. I just walk away and I don't trade on Thursday. And today's Friday, April of 9th, and I'm expecting good action today because yesterday was a balancing day. But I think I'm gonna end the video here. It's getting kind of long, but I hope some of you guys can learn something from this, and we'll go from there.